Subscribe. Subscribe to our channel. Learn more. Learn more stuff.
Yes.
Are you watching kittens?
No, it just popped up.
All right. Hello, everyone. Welcome to Main Street Minute. I'm David.
I'm Claire.
Hello, Claire.
Good morning. Good afternoon. Okay.
Good evening. Today we're going to talk about credit.
Because
It's important.
it's very important.
And many people don't understand the impact. A lot of people think they know what credit's all about, but really what credit is as a measure, if you will, of your behaviors, your habits, on how you pay your bills. Right?
Correct.
Correct.
So where do you want to start?
Well, we could talk about credit as it relates to, what is good credit. Having no missed payments and having a history of paying on time. When they're doing an algorithm for your credit score, and some of the things that are taken into consideration are going to be utilization on the credit accounts that you have. They're going to be the age of your average line of credit. So if you've got a credit card that's open and you close, like you do the short-term financing and you open and close and open and close, opening credit and closing credit accounts, it's not necessarily a good thing.
No. So you said aging credit. So what if somebody had a credit card since they were in college or high school and they still have it open? So that's old.
Yes.
But is that considered a detriment?
No.
It's good.
That's a good thing.
Okay.
Once upon a time, available credit would be a sure way to be sunk of getting a new credit line, because having too much credit available would be seen as a bad thing. Now, it's not the case. Now, having credit available to you is a good thing.
But having too much credit, are you talking what you can spend on your credit card, or are you talking too much credit, too many credit cards?
Less of an issue. Really isn't much of an issue anymore.
Now, I thought if you had too many credit cards that they considered you a risk because you had too many open credit cards.
That used to be the case.
Not
No
anymore.
more. No.
Oh, I didn't know that.
So
Okay.
if you have your credit cards open now, you figure, say you have 15 credit cards, and it really comes down to utilization, meaning that, I'm not saying that what you're saying doesn't have an impact, but it's not as it was. Now it's about how you use your credit. So if you've got a $15,000 in available credit and you're using between $1,500 to $3,000, then you're considered low utilization. Anything under 20% utilization is considered good for your credit.
Okay.
And another thing is that having your average, the benchmark really is 8 years for an average credit card or average length of credit history to be open. So whilst having an installment, which is counted differently than a revolving credit account, meaning an auto loan or a mortgage versus a credit card, they have different impacts, different weights, if you will. So even though that most auto loans don't go 8 years, your average age of credit, the benchmark for credit age is 8 years. Your average account is 8 years old. That's considered to be excellent.
So do you think first-time home buyers should pull their own credit before they apply for a mortgage?
Well, understanding
to see what's on there?
Yes, understanding your credit, it gives you an advantage that way. Facing the unknown really puts you at a disadvantage because just a level of comfort really. So places like every year you have access to your credit report. You can go every year. You get a free report of what your credit is, and I believe that is annualcreditreport.com, where you can actually go and the bureaus provide you a detailed history of your credit report. They do not, however, provide you a score, which you can purchase, I believe, for somewhere between $7 to $10 per bureau to get your score from that bureau.
Okay.
And on the other side of that, you don't have to wait to get that. You can take a really or a peek, if you will, through places like Credit Karma or if you have a credit card like an American Express or Capital One, they offer different access to see your scores. Some of them offer what's called a Vantage score, which is not really your FICO score, and FICO scores are what is used to make credit decisions. Vantage scores are something that's coming up, and there's a little bit of confusion as to which one is going to be used for what purposes, which purpose. You have the difference is the Fair Isaac is the FICO, and that particular algorithm is what's used with regularity, has been used for decades for predictors on how well someone will perform if you extend them credit.
Okay.
So you can get a Credit Karma score on your phone, and it will give you a score, but that score is not necessarily your FICO score. You see?
I see. So, but don't you think too, not even just to know what your score is, but don't you think that with all this identity theft, that you should just see what's on your credit report?
Well, yeah, and it's not perfect. You can find that, sometimes you might, if you look at your credit and you get your credit report, you may find that there are accounts that are there that don't belong to you.
Correct.
You could be liable, or someone considering you to be liable for medical history or medical collection, something like that, which was never yours. And you can then submit, with one of the good things about that website, annualcreditreport.com, is that you can actually go to the website and you can contest or dispute one of the, whatever the item is on your credit report that does not belong to you. And they have 30 days to prove that it's yours, or they have to take it off.
I think something that's very interesting is that new buyers don't realize that during the mortgage process that your credit will be run again before you close on the property.
Right. So when you apply for a mortgage, you will go through the underwriting process, and right before closing, they'll pull your credit again to make sure that everything holds true. All of your liabilities, your monthly payments haven't skyrocketed, or you even made a decision to buy a car. There's a few other things that within there. I mean, we could talk for hours about credit and how about the impacts if you have too many disputes on your credit report. You'll be disqualified from a mortgage. If you have, high utilization, it'll tank your credit score, which will end up costing you more money. But because credit right now, it bleeds into so much of your life right now. It bleeds into your work. It bleeds into your insurance rates. It bleeds into your available credit, the cost of credit that's extended to you. I mean, everything has to do with your credit score. And that's why going to those websites and getting more information about what's going on with your credit report, you can control more of the outcome. You can control better what's happening around you.
What about medical collections?
What about them?
So are those frowned upon? Should you try to... because what if it's an insurance, or what if it's a dispute that you're having and it's showing up there? And some of them can be large.
Yes.
So does that have a negative impact?
It does. Anything that you have, like, for example, it goes back to utilization, for example. Anything in credit collections, anything that's in collections, it usually means you've gone 90 days without paying it. And that's a problem. That's the problem for credit. It's a problem for your credit score. It's a problem for your predictor of what's the likelihood you're going to default on a loan. So that becomes an issue, as with any collection would be.
So let's talk about, real quick, when we talked about doing the credit right before you close on the property, they pull it again.
Yes.
How many times has a deal blown up? Because I know as a realtor it's blown up.
Well, the biggest problem is where people go out and they buy cars, or they buy furniture for a home they've not yet moved into. Things like that have a huge impact on your ability to borrow. And it could be, you could open a credit account and it may not necessarily change your debt ratio because you haven't really purchased anything. All you've done is open an account. But by opening a new account, it does a couple of things. It's a new inquiry, which affects your credit score. It's a new account, which affects your credit score because it takes away from the average age of your credit accounts. Those are the things that come into play. And if you've purchased a car, then you get a high balance on that, which also has another effect on your credit score. So where the pricing lands on what the rates available for you today, they have what they call loan level pricing adjustments. Those have effect on how much it costs you to borrow money. So if your credit score goes below a certain amount, or a certain number, the cost of you borrowing that money goes up.
So,
And that could disqualify you from being able to borrow the money at that point.
quick funny story.
Funny, haha.
Funny. Was at a home inspection representing the buyer.
Sure.
Buyer pulls up, brand new F-250.
That's never
Got
happened.
very excited. I said, "Oh my God." And he said, "What?" And I said, "Did you just buy that?" And he said, "Yes, because I'm going to need it when I move." Never closed.
No.
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 Big problem. Don't even charge a pack of gum.
Don't co-sign.
Don't do anything.
Don't maker. And that being said, and all the credit that has to do with you, and there's a lot to talk about credit. There's obviously annualcreditreport.com is a good place to go to get your credit report so you can see what's going on with your credit. And also within the bureaus themselves, the things that they're doing with their scoring models and Vantage scores and so forth. That's another thing that they're doing. But also your profile is sold to insurance companies, to marketing companies, to credit card companies, and not necessarily your information per se, but your credit profile is sold to be mass marketed. So a lot of the phone calls you get, a lot of the junk mail in your inbox or in your home mailbox and so forth, all has to do with your credit information being sold at a mass scale. And one thing you can do to stop that, or at least limit that or bring it down a bit, is you can go to optoutprescreen.com and you can stop that for 5 years. Or if you write a letter in, you can actually stop it permanently.
So to wrap this up,
Yeah.
what do we tell people? Pull your credit report.
No. Go in the know. Pull your credit. Know your situation.
Know what it is. Know what's on there. And then
Address it.
address it. And a loan officer, could they help you with that?
Yes. When you're applying for, there are different things you can do. When you're applying for credit from a loan officer, you can actually have the conversation about what's going on with your credit and what can you do to improve your credit. What are the steps you can take to improve your standing? Because where you are doesn't necessarily mean that's a hard, fast rule. It's an algorithm. And if you change the variables, you change the outcome. And there are things you can do. There's a little bit of a recipe to the soup, if you will.
Okay.
Yeah.
So, lesson, pull your credit.
Yeah, be in the know. Yeah, get in the know.
Okay.
Well, like this video, please. Share with your friends. Come check us out. We're here every week. More information. If you have any questions burning in your mind that you want to know answers, you have answers to, or you need answers to, just put in the comments below, and we'll answer them.
Okay.
Okay.
Thank you.
Thanks. Bye.